Hi, this is Jack Crooks from Money and Markets TV. Since the US dollar was allowed to float freely against other currencies back in 1971, long-term trends in the currency markets have ranged from 6 to 10 years. The most recent was the 7-year bear market lasting from 2001 until 2008. It was punctuated by the US dollar index hitting bottom during the depths of the credit crisis. In the 3 years since then, the dollar has yet to fall below that level, and all the indicators I monitor tell me that we're about to enter a new multi-year bull market. For those that question that statement, I can point to 9 separate indicators that support my view. Number 1, the credit crunch of 2007 and 2008 forced a change in consumer behavior. Now, the US savings rate is on the rise and the debt sentiment has shifted. Second, the debt crisis in the Eurozone has investors fleeing from assets perceived as risky and searching for safety in the markets. They're finding that relative safety in the dollar. The third factor pointing to a long-term bull market is economic growth. While GDP has been less than stellar in the United States, it's not as bad as expected and much better than Europe, the United Kingdom, and Japan. The fourth factor supporting the dollar's strength is a global interest rate environment and the carry trade history. The Fed will likely hike rates before the Bank of Japan and the European Central Bank, and the ECB will probably cut rates soon. Number 5 is the fact that U.S. assets are very cheap and enticing. Foreign direct investment in the U.S. is improving, and some manufacturing is even coming back home. I'm also encouraged by the fact that sentiment is trending the other way. Newsletter writers insist that the dollar is doomed, and history tells us that when they're this certain, they're almost always wrong. Factor number 7 is the inverse correlation between stocks and the dollar. If the market breaks down, as I expect, the dollar will likely rally on that alone. Factor number 8 is a technical indicator. The dollar recently broke its weekly downtrend and cleared some key resistance on the upside, and I believe momentum will carry it higher. And last but not least is the outlook for the euro. The shared currency experiment seems to be coming unglued as the debt crisis spirals out of control. When the euro craters, traders will rush into the US dollar on their way to buying treasuries. All these factors represent a perfect storm for the dollar, the likes of which we don't see very often. So I believe that right now, the dollar represents a great risk-reward trade with a huge upside potential. How huge? Well, during the last bull market from 1992 to 2002, the dollar rallied 55%. And in the bull market between 1978 and 1985, it soared by 100%. If you can catch a multi-year bull move in the dollar early, there's a ton of money to be made. Of course, that requires you have the staying power and the confidence to stick with the trade. I'm Jack Crooks from Money and Markets TV. Thanks for watching.